Joining me now is Ryan Detrick. He's chief market strategist at Carson Group. And Ryan, it's great to have you on. Also note the equal weight S&P hitting a record and finally playing catch up here in the session today, too. And every S&P sector in the green except for consumer staples. So what does that tell us about the rally we're seeing here and whether it continues to have legs, since I know you've been very bullish throughout the summer?
Yeah, Morgan, thanks for having me. Happy Friday, everybody, and happy new highs. Just some stats about today, like you just said, over 90% of all the stocks in the S&P 500 are higher as of right now. We'll see where we close, and we're hitting an all-time high. Jason Gepford over at Sentiment Trader noted that's only happened 2 times in history, like in the early 80s and then in 2013, both really good times for extended bull markets. So we're seeing a ton of buying thrust today, a la kind of off those April lows. And again, we're not there yet. The market's not closed, I'm aware. But again, we've been saying maybe there can be some seasonal weakness in late August. We had the down 4 days in a row, but this, surprises in a bull market happened to the upside. I guess you could say the market's surprised again by how dovish Powell was, apparently, and markets are obviously moving again.
All right. If seasonality and the volatility that can come with that continue here, do you buy on the dip?
Yeah, we would. Absolutely, we would. So I think it's safe to say the market is saying there's going to be a cut. So let's hypothetically say we have a cut in 4 weeks. I took a look. When you have a long break in between cuts, we're going to have 9 months, obviously, since the last cut, assuming we get one in a month here. If you go between 5 months to a full year in between cuts, Morgan, 1 year later, S&P's higher 10 out of 11 times with a 14% median return. What I'm getting at, this pause we've had, this, what did Tom Petty say? The wait's the hardest part. Well, apparently, the wait was going to be worth it. And don't fight the Fed. It could be another good end of year rally here.
Okay, so what do you buy?
Yeah, we're sticking with what got us to the party. I mean, we've liked financials all year. We've liked industrials all year. We've liked technology as well. So we're sticking with those areas. I know they're all doing well today. Tech's lagging a little bit, but the other ones are still strong. Now, one thing that gets us, we are underweight small caps relative to large. We have small cap exposure. That's the one thing, if I think about where we might potentially be wrong. Hey, small caps are awfully hated. So listen, I'm fine with small caps rallying if the overall market continues, but stick with those cyclicals is what we're telling people.
Yeah, Russell 2000's up 3.8% right now. It's got a more than 3% gain on the week. It's the best performer by far for the month of August. I guess when would you feel comfortable that this is a group that is not only just seeing a bounce here, but actually playing catch up to what we're seeing in all the other averages?
Yeah, what I like to see is relative strength, so again, relative to the S&P 500, relative to the NYSE, to see a little bit more leadership. I know this is a short-term blip over the last week or two with small cap leadership. And if we see a little bit more, leadership there, that could be an area. But I think the bottom line, this is a global bull market. I know a lot of people have talked about that, including myself. We've got various indices hitting all-time highs. This is a nice year to be a diversified equity holder, and that's why we do this, to stay diversified. It's a nice setup this year.
Okay. Bond market, what do you think happens there? Because we have seen this curve steepening, and yes, yields are under pressure in general today, but the Fed-sensitive 2-year has dropped much more dramatically on the heels of Powell than everything else.
Yeah, you had some great discussions before I came on. 10 years down, yes, maybe not as much as you might think. We looked at what Powell said, and I know you talked about this before I came on. We're not so sure he was as dovish today as he was a year ago. Clearly, he's signaling a cut. So we're underweight bonds relative to stocks and have been for 2 years and are still comfortable to be there. But obviously, if with the potentially dovish Fed, and we know next May what's going to happen with new leadership at the Fed, probably going to be dovish as well, it makes sense to have some bonds in a portfolio. We just still think stocks, Morgan, are the way to go here.
Okay.